Imagine waking up in 2030 and Bitcoin has soared to $500,000. What would that mean for us as investors? The journey to that staggering figure isn't just about speculation. It's rooted in a complex interplay of factors. Institutional adoption is on the rise, with major companies integrating Bitcoin into their balance sheets. Then there's the halving cycle, which historically has led to price surges. We can't ignore the macroeconomic landscape either. Rising inflation and currency devaluation could push more people toward Bitcoin as a hedge. And let's not forget the increasing scarcity. With only 21 million Bitcoins ever to be mined, demand could far outstrip supply. Looking back at the last decade, Bitcoin has defied the odds, bouncing back from crashes and emerging stronger each time. If history is any guide, the next chapter could be even more explosive. So could we really see Bitcoin at 500K by 2030? The signs are there, and as investors, we need to keep our eyes wide open. Bitcoin's potential to reach $500,000 has sparked intense debate among experts. On one side, we have bullish analysts pointing to increasing institutional adoption and the looming scarcity as Bitcoin's supply diminishes. They argue that as more companies integrate Bitcoin into their balance sheets, demand will skyrocket, pushing prices to unprecedented heights. Conversely, bearish voices caution against over-optimism, highlighting regulatory uncertainties and market volatility as significant hurdles. They remind us that Bitcoin's past is riddled with dramatic swings, making predictions a risky game. So, can Bitcoin really hit that 500K mark by 2030? It's a complex equation. Factors like technological advancements, macroeconomic trends, and global acceptance will play crucial roles. Ultimately, while the allure of a $500,000 Bitcoin is tantalizing, the path to that milestone is anything but certain. The future of Bitcoin remains a captivating puzzle, one that we'll be watching closely. As we analyze global economic trends, it's clear that several factors could propel Bitcoin to unprecedented heights, potentially reaching 500K. First, consider the interplay of supply and demand. With a capped supply of 21 million coins, increasing institutional adoption is tightening the available supply, driving prices up. Institutional investment is a game changer. Major players entering the market not only bring capital, but also legitimacy, attracting more retail investors. This influx can create a feedback loop, further inflating demand. Then there's the Bitcoin halving cycle. Historically, each halving event has preceded significant price surges. As the reward for mining Bitcoin decreases, scarcity increases, which could lead to higher valuations over time. In this complex landscape, understanding these dynamics is crucial for any investor looking to navigate the potential rise of Bitcoin. The convergence of these factors could very well set the stage for Bitcoin to reach that 500K milestone. Bitcoin's journey has been nothing short of revolutionary, but as we stand on the brink of a potential 500K valuation, we must ask, is it truly ready? The Lightning Network is a game changer, enabling instant transactions and drastically reducing fees. It's like giving Bitcoin a turbo boost, allowing it to scale in ways we once thought impossible. But that's just the beginning. As we dive deeper into a Web3-driven economy, Bitcoin's role is evolving. It's not just digital gold anymore, it's becoming a foundational layer for decentralized applications and smart contracts. Imagine a world where Bitcoin powers everything from microtransactions to decentralized finance, seamlessly integrated into our daily lives. The speculative nature of this evolution is thrilling. Will Bitcoin become the backbone of a new economic paradigm, or will it struggle to keep pace with emerging technologies? The future is uncertain, but one thing is clear. Bitcoin is not just a currency, it's a catalyst for change. Regulations and restrictions are looming over Bitcoin like a dark cloud. As governments tighten their grip, the question arises, will these measures derail Bitcoin's ambitious 500K trajectory? The reality is, compliance could stifle innovation and push investors to the sidelines. Then there's the environmental debate. Mining consumes staggering amounts of energy, And with climate concerns at the forefront, could this be the Achilles heel for Bitcoin's growth? If the narrative shifts against it, we might see a mass exodus to greener alternatives. And let's not forget the competition. Ethereum and other cryptocurrencies are not just nipping at Bitcoin's heels, they're innovating at breakneck speed. If they can offer better scalability and lower fees, could Bitcoin become yesterday's news? Investors need to stay sharp. The landscape is shifting.